means for just about everything, but including the investing climate. James, thanks for being with us. You were listening to what the Prime Minister was saying. What was your reaction?
It was a great speech, and I think that also, though, it reflects the intention of this whole tariff conversation, which is, in our view, to threaten the tariffs, to bring them on, to create the fear that it is creating, and to lead to negotiating. That's really our view, and it's going to be painful, as those tariffs come on. But we think that it's not a long-term situation. It's going to be short as parties come together and come to a better settlement and negotiation. So I know investors, I think the message for investors here is, yes, this is causing markets to go down. Yes, there's a lot of fear about longer-term trade wars. We think this is going to be, this is a Q1 story and probably not something we'll be talking about a couple quarters from now. But there are going to be winners, John, and losers. We're already seeing it in the markets, and probably will over the next few months.
James, I think the tricky part, and I totally understand what you're saying, but as soon as we saw the sell-off today, once the tariffs were implemented, people said there was too much complacency in the market. Are you taking a viewpoint even now in the face of tariffs that might be too complacent?
Well, I think markets have been too complacent for months. I mean, we've been saying the market's way overdue for a normal correction. We haven't had an 8 to 10% pullback since last July, and that's abnormal. So I think markets were really set up for some sort of pullback. And, the fact that the tariffs were going to come on is not new news. So markets really are about discounting. I think what we see here is, gosh, a little bit more uncertainty, particularly with what's going on with Europe, was just enough to bring on what I would consider a normal correction. We're down about 7% now. Normal corrections can be 8 to 10. And boy, those AI stocks, that higher beta stocks, as you probably know, they're going to come down even further. Again, this is where I would suggest to investors, recognizing that Trump wants, he considers his popular vote to be the stock market. He wants higher stocks. I think what you're going to see is when this correction exhausts itself, maybe over the next days or weeks, stocks go higher for the rest of the year, and particularly in back to that AI business cycle that we're in.
Well, at the end of the day, the Trump team is at the ready to field questions about what's happening in the stock market. It looked like the Treasury Secretary was, I'm paraphrasing here, said something like Wall Street's been doing just fine, almost to send a message that they've got stomach for red on the screen. How long, I don't know. Other people are theorizing that they'd like to see Treasury yields continue to come down because of the need to refinance U.S. debt. Anyway, beyond all of that, if it is your view that this ends up being a first quarter story, and to your earlier point, we had not seen a correction for the S&P 500 during this bull market. We're actually just coming off February, which is a notoriously weak month for stocks. But if you think this is, in the end, a negotiating ploy, how do you think things play out from here?
Well, I think, as I even say that, there will be winners and losers. And, you can see in today's tape, why is Taiwan Semi up and Apple up? Well, those are the two companies that got together with Trump and actually made some sort of settlement or big investments, $165 billion by Taiwan Semi. Apple, obviously, big investment as well. And I think that's a sign where investors really want to sort of focus on sectors and stocks that might be able to be survivors, particularly in this volatility, the chop. You look at, the microcosm today, I think, is of the market for the rest of the year. If the automakers don't come to some sort of concession, you can see Ford down big today. So I think this is a stock pickers, sector pickers market. I think it is important to be a global investor. So our view is this is a overdue normal correction coming with a lot of fear, but we go higher, and we think, the S&P can go to 70, 50 by the end of the year. That's pretty far away now with the market down. So great opportunity for a great window here.
James, we're almost out of time, but are you suggesting that companies can protect their profit potential by doing what Apple did, by saying, hey, we are going to be investing in the USA, that if you see announcements like that, that is a buy sign for a stock in a stock picker's short-term market?
Sadly, yes. I think even though with Apple they were already going to do quite a bit of that, messaging that to this administration, it goes a long way.
Okay, James, appreciate you staying with us as we continue to watch this breaking news story. James Demmert is Chief